Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on CyclesMan.com. Welcome back to the show, Tim.
Hey, Jim. Thanks for having me.
Tim, what's going on with gold right now?
Well, we had intermediate, in my world, and I look at everything cyclically, we had intermediate degree lows back in, I think it was on March the 8th, actually, that there was a little clustering of cycles that bottomed. It was an intermediate degree low, and we've been rallying out of that low. Within the context of that rally, I do think it's counter trend, and gold's obviously been lagging commodities, but, anyway, in the meantime, yes, we have an intermediate degree low, and its bottom line is it'll stay in, that buy signal will remain intact until it's reversed. And then I need to look at the structure once we get that sell signal, to try to determine if the rally is over, but it's an intermediate degree low.
What does this mean for the junior gold miners, which have had just the toughest stretch you can imagine when everything else in the world has been booming? People still aren't investing in them, yet if gold goes up, they're going to, blossom overnight. Why hasn't that caught a lot of attention yet?
Well, maybe that's a sign of that this is a counter trend rally. I think, I don't look specifically at the junior miners. I look at the XAU and the HUI and, just the broader indexes. And what I see there is that, I've been saying all along in my letter that, the structure that I see there suggests that this is counter trend. Now, that said, yes, they've been up as well. They've rallied out of the same intermediate degree low. And, I'm not sure what they're doing today. I'm not looking at the chart. But, again, within the context of a much broader, higher degree level top, I do think this is counter trend. But for now, we have an intermediate degree buy signal on them as well.
Do you think things like Bitcoin and other cryptocurrencies have been siphoning off money that normally would have gone to the precious metals?
I never thought about it that way, and I don't know that I have an answer to that. I really don't know. Maybe so. I think it's, as I think about it just a little bit and process that thought, I think it's kind of ludicrous that someone would, I don't know. Look, somebody will disagree with me on this, and I don't need hate mail over it, but, the sheer thought that there's some kind of value with, maybe I'm just old school, but with a coin that's backed by nothing. I don't know. Give me an ounce of gold. Even though I'm, I don't mean to, on the one hand, I sound bearish on gold, but compared to Bitcoin, look at the irony of that. With gold, you have something tangible. With Bitcoin, what do you have? And if the internet goes down, you got nothing. I'm not a fan of the cryptos. I think it's a disaster. But, for now, hey, everybody's making money on it. My 20-year-old nephew called and said, hey, he's trading, Bitcoin, making money. That's just the sign of the times. That's the shoe shine boy.
Yes, and they create, I think, 7 new cryptocurrencies a day now, and I have a Bitcoin price alert thing that gives me news on what's going on in the crypto space. Pancake Swap passes Ethereum in 24-hour transactions. Like, what the hell is a Pancake Swap?
I know. I don't know.
Tim, we need a Tim.
I'm not buying it.
Yeah, Tim, we have to start the Tim Jim coin.
Exactly. Look, there's been a lot of people make a lot of money on it, but let's be real about it. I think it was either they knew something that the rest of us didn't know, or they were just lucky. But this, like I said, the Bitcoin cryptocurrency thing, I'm just not buying. Just not buying.
Well, this reminds me a lot of the New York Stock Exchange in the late 1800s. There were no rules, and people became instant millionaires overnight, and then became instant paupers the day afterwards. There were no rules about things like a prospectus, or you just start a rumor. Oh, this is the next big thing here, wireless telegraph, or something like that, and people would believe it, and they'd buy into it.
And I suspect this is going to be the same way, and not to jump ahead, but, I've been saying all along, I think that this is one big giant, I hate to use the word liquidity, but one big giant, liquidity-driven bubble. And I think that just like we've seen before, whenever the setup comes, whenever we get there, I think that it's all going to come down together, and I think there's going to be hell to pay in that cryptocurrency market because let's face it, it's a parabolic. Here's a fact. Anyone that wants to, I don't know anything about crypto, but I don't have to know anything about crypto because I understand the charts and I understand history, market history. And here's a fact. I don't give a damn if it's crypto or if it's the South Sea bubble or the tulip mania or sugar in the 1970s or soybeans or crude oil, or it doesn't matter. That is a parabolic chart, and they all unwind the same way. So how long can it go on? I don't know. Until actually I do. Until a structural setup falls in place to cap it. And that will happen. And you know what? That may be something fun to watch. Let's watch that. And if I need to watch that closer. And if we see it, maybe we can talk about it when it happens.
We'll have more with Tim Cyclesman Wood right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, if the U.S. dollar is going down, that means other currencies are going up. What's hot out there?
Well, the stock market, and we're just not there yet. This thing it's been being held together. They fight. Look, make no mistake about it. They're doing everything they can to hold this house of cards together. That's why we've seen the $6.4 trillion in so-called stimulus, is to try to bamboozle the market and hold things together. And so far it's working. On the one hand, it's working because on the one hand, hey, the market is holding up and has moved to new highs. But on the other hand, have they accomplished the mission of, defeating the deflationary forces? No. It's deflation that's been being fought for, all along. I mean, that's what QE was about. That's what, this last round of stimulus was about, was fighting the deflationary forces. And so if they had won that battle, then just think about it logically, then they wouldn't still be fighting the battle. And that's why they can't take their foot off the pedal. If they do, then, I think they understand the consequences, but yet because the foot's been on the pedal, that's why the bubble has continued as it has continued into the bubble that it is. And so it's reached a point of absolute insanity. But, so far they've done a masterful job at walking the line and holding things together. And so, you ask what's up. Well, equities are up. Lumber has been sky high. Of course, it may be pushing into, if we start to see some tops in commodities, then, I think lumber, along with the CRB and crude oil may be trying to roll over here and soften a little bit. So we're kind of in a window where maybe commodities could start to cycle down. But you ask what's up, commodities and equities have been.
Could this be a typical sell in May and go away year?
Yes, it could. Yes, it could, but in my world, it comes down to the structure, and I know I say that every time, but it's true. You know, on the one hand, and I don't mean to sound like I'm talking out of both sides of my mouth, because I'm not. On the one hand, is it a bubble? Absolutely. All you have to do is look at the chart. On the other hand, nothing has set up. You know, we tried to crack. We did get a setup back in early 2020, in January, February 2020. And we saw that decline, had everybody worried, but, you know, they were able to refuel this thing one more time, blow it up into this even bigger bubble, and you know, how long does it go? I don't know until we see structure again. And so that is the key. And then once we do, then the battle or the question will be, well, can it be saved again, or is this where it cracks? And again, the structure will tell us everything we need to know.
We'll have more with Tim Cyclesman Wood right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what's going on with interest rates? Fed head Powell says he's not raising rates anytime soon. However, the Bank of Canada just said yesterday that they could see interest rates starting to rise a year from now. Do you agree with what they're saying? I mean, so you have, when he says anytime soon, can he actually control interest rates if the international community is saying, yeah, they're going to go up, and it may be sooner than later?
Well, no, I don't think he's going to raise rates anytime soon. And I think that's stating the obvious to create the illusion of some sort of control that they really don't have. And I know that's a controversial statement. People say, oh, well, the Fed controls the short end. The Fed, it's an illusion of control. And I've talked about that for forever. And, you know, some simple studies with data proves it. And so can they talk and jawbone and what I'm drawing a blank on what I'm trying to say. Can they influence the market and set an expectation for rates and maybe talk rates up or down? On occasion, yes, that works. Other occasions, it doesn't work. And right now, the pressure is on rates, and I think that it is, how do I say this? The interest rate picture is telling us that this rise in commodities that we've seen is a cyclical advance, and it's not inflationary. Or let me say that another way even. It's not the hyperinflationary scenario that people are looking at. They're misreading what is happening with the advance in commodities and the so-called money printing thing. Interest rates are telling us the tale. Interest rates are saying that this is just like, think about 2008 when crude oil was, you know, at whatever it topped at, $147 a barrel or whatever, and everybody was talking about peak oil. That's the same sort of situation we're in here. Interest rates was telling us then that wasn't sustainable, and that's what I'm saying here. It's telling us that, yes, absolutely. I mean, lumber prices are at all-time highs, I think. And we see, you know, we've seen commodity prices rallying. Yes, I'm not denying that. Absolutely. But this is the same sort of situation where I think interest rates is telling us it's not sustainable. The environment we're in is not this hyper runaway inflationary environment. We're seeing a pop in commodities. And I think that, again, once we get the setup to turn the commodity market and to turn equity market, it's going to be a very, very risky proposition for all asset classes, including Bitcoin.
Is it going to be hyperinflation like many people say? And I don't think it will, because when we had hyperinflation back in the 70s, wages were going up 10 and 15% a year, along with housing prices. But you know what the government's solution to hyperinflation was? It wasn't any economic policy. It was just they stopped reporting the cost of living being connected to housing and the price of fuel. So all of a sudden inflation becomes 2% instead of 9% there. Problem solved. Just don't report it. Don't report any accidents on the highway, and guess what happens?
There's no accidents.
There's no accidents, yeah.
Right.
So it's the same thing here. So do you think it's going to be hyperinflation, inflation of some kind, or things going to go down? Will we have deflation?
Look, it's kind of a word game, and so let's try to clarify that a little bit. One trip to the grocery store, write your insurance premium for your homeowners or your car, or go buy a prescription. Gasoline, everything you need, prices have gone up. So on the one hand, absolutely that's inflationary. I'm not denying that. I mean, I'd be a fool to suggest otherwise. Look at housing prices. I mean, it's insane what has happened to housing prices just in my area in the last year or so. And lumber prices. Look at the charts. I mean, look what's going on. So absolutely, that is inflationary, if you will. No question about it. That's not what I'm talking about when I say inflationary. What I'm talking about is that they haven't reinflated. It's hard to even have someone get their mind around what I'm trying to say when I say it's not inflation. It's not reinflating the economy. This economy is, yes, there's a bounce back in the economy, but if we go back to some of that statistical data, the fundamental data that we covered a year or so ago, we saw the credit expansion, and I'm saying this from memory because I don't remember now, but I want to say in 2011 we started to see the growth rate and credit expansion roll over. We started to see all these economic markers weakening and rolling over between 2011 and 2015, and they were rolling over out of the weakest recovery since the Great Depression, looking at that data. And so those are facts. And so are we recovering? Are we rebounding? Yes, we're rebounding, but we're struggling to get back to that point. To the point, and when I say to that point, let me clarify. Post-2009 was the worst economic recovery since the Great Depression. Some may want to argue with that, but you haven't looked at the data if you don't understand that. That is a fact. And so what I'm saying is we're struggling to get back to that point in this so-called post-COVID recovery. And so is there a recovery? Yes. But put it in context. And has there been this crazy move in commodities? Yes. But put it in context. And so what I'm saying is that I think this is a fake out. This is just like what we were seeing with, best example I can think of is crude oil in 2008 when everybody was talking about peak oil. And I remember seeing a program on TV, who was the big oil guys, T. Boone Pickens or somebody like that was talking about, I can't remember if it was him, so I don't want to falsely accuse, but it was some big shot oil guy talking about peak oil. And I don't know anything about peak oil, but I remember, because of the technical analysis and structure and so forth, knowing and called it on the air with Jim Puplava back at the time that crude oil had peaked. And so I think this is the same sort of thing that we're seeing here with commodities, is that people are misreading it for something that it's not. And so that's what I mean. And then ultimately, let's finish that thought. Ultimately, when that popped, it took the housing bubble, the housing with it. It took, equities with it. It took commodities with it. It took everything with it. And that was deflationary because, as we've talked about before, it destroyed property values here. Cash was king at the time. And so that's what I'm saying. This is a fake out.
Here's something I just thought about. Unemployment may be much worse than we think because the pandemic, the lockdowns, the closures, all the businesses failing. Small business owners don't qualify for unemployment insurance because they were never employed. They were employers, but they're effectively unemployed now. That's something I don't think they have a statistic for.
And I think, I don't know, but I think you're probably right.
Is this the death of the middle class in America? Because most middle class people made their money starting or running a small or medium-sized business, and many of them have been destroyed. Can they ever come back?
You know, I don't mean to be pessimistic, but I think we are seeing the destruction of the middle class. And the unfortunate thing is that I think that people are optimistic, and I understand trying to be optimistic, but you also have to be a realist. And I think that people are looking at this and they're going, oh no, we're coming back. You know, they look at the numbers that they're reporting, and the economy is expanding, and Powell is telling us that the economy is strong, and you know, I'm not putting words in his mouth, I can't remember what his comments were, something to that effect. But, you know, they're telling us that we're rebounding, that we're recovering, we got the vaccine, everything's going to be fine. And I say all that to say this, is that people are listening to that, and I think positioning accordingly by trying to pour money back into their businesses, to try to reopen their businesses, to try to move forward. And what I'm saying is, or trying to say is that when this illusion fails, and it will, then I think that the ones that didn't lose out, you know, that hadn't already gone under, will then. And so, yes, I think it is a slow destruction of the middle class. And then people that have, you know, nice fat 401ks and all that, and I'm not giving advice here in any way, but people who have just sat tight and look, they made the right decision, they got lucky, whatever, and they've rode this out. I remember seeing people, I've told this story before because it was, I mean, I literally saw tears in a lady's eyes, and she was saying if we can just get back, you know, this was back in March, then, you know, we're going to cash out. I guarantee you that didn't happen. And they've gotten back, this market has gone up, and now, if I'm right about this deflationary outcome with everything, you know, the bubble bursting and everything coming down together, those are the people that's going to be taken out this time. And so, yes, I agree. I think it is the destruction of the middle class.
We also have companies, share buyback mania is back. They're borrowing money again to buy back their own shares. Are they setting themselves up for disaster? And of course, we know afterwards they'll come begging for government handouts.
Yes, of course, and I do think they are, and you know, who knows if they get the government handout? So far, they have. I don't think that's right. I definitely don't think that's right. You know, if you know the small business owner, you know, if he mismanages his business, or even if he doesn't, you know, just like, you know, we're talking about from this whole COVID thing. I mean, they've done everything right, and they had a successful business. They're out of business. There's no bailout for them. But, you know, the large corporation, you know, they deliberately mismanage and do things that aren't prudent, and then they're going to get the bailout. No, I don't agree with that. Absolutely not.
Should you be too big to fail?
You know, that's a hard question. I get that. When you really stand in those shoes, I get that. But
because I know after the 2008 recovery, they've done studies, and they're saying, no, if that company needed to be bailed out, they weren't on a strong economic basis to start with, so just let them go. Let people pick up the pieces, and the people who work for them will find jobs back in either the split-up company or the reformation of the company. But it's always done in the name of jobs. We can't let that airline go under. It employs 20,000 people. We have to bail it out to the price of billions. But believe me, if somebody else buys that airline for a fraction of the price of what it went for originally, they'll still employ those people. They'll still need pilots, flight attendants, mechanics, all the other people associated with it, booking agents and so on.
Right. I don't disagree with anything you said. And when I say that's a tough question, I understand the question, and ultimately pressed to the wall, I agree with you. I mean, as hard as it would be to make that decision, yes, I think, you know, I mean, can you imagine if GM had failed? But if GM put themselves in that position, then, you know, sorry.
Ford never needed to be bailed out because they didn't go into share buyback mania. They scraped together the money to survive themselves. So they came out stronger, bigger, and better.
I can't argue with that either. And you know, another thing I've noticed, I don't know if these dots connect, But I saw today, GM's got a big initiative now pushing for, they took the money, obviously, and now GM is pushing, they have this big initiative, I think, by 2025. Don't know if they're going to meet the goal, don't know if the goals change, but it's been a little while since I've read it. But in the recent past, in the last few months, I saw where GM is wanting to have, I think it's 30 of their models, electric models by 2025. Well, that's not long. 2025 is just around the corner. If they're going to have 30 of their models being electric vehicles, that's quite the goal to meet. So I don't know if that's going to happen, but there is this big governmental push for electric vehicles. And then just today I saw where, Biden, just because somebody says something doesn't mean that they can meet the goal or that it's realistic. So, just put that out there for what it's worth. But there is at least a public statement that they're wanting to reduce emissions by 50%. I think it was by 2030. So my point is that there is this push to reduce emissions. There is this push to move toward electric vehicles, and it seems that to me that GM is, and I don't mean to pick on GM, I drive a General Motors vehicle and always have, but it seems to me that they are a front runner in this, and they took the money. So it makes you wonder, right?
Well, when you get rid of oil and gas, you get rid of really well-paying jobs in the oil patch. But what about the mom and pop garages that tune up cars and maintain them? Once you have an electric car, the only thing you really have to do is put more windshield wiper fluid in, and once a year get your batteries checked, check your tire pressure. But you don't have to change oil, you don't have to worry about so many other things. Brakes last a lot longer with an electric vehicle because every time you touch the brakes, you're actually generating power and putting it back into your batteries, and that helps slow the car down. So what about all these jobs, the auxiliary jobs that are going to be lost? Have they anticipated that?
I don't know.
Of course they haven't, Tim. Of course they haven't. They never do.
And what I'm anticipating though is this. Imagine the car shows. Nowadays you go to a car show and you see all the cool old cars and everybody's got the hot rod engines and first one thing and another, and everything's all customized. What are you going to do? Customize your battery pack? You're going to paint it? You're going to chrome plate your battery pack? I mean, come on.
Yes, but the model draped over the car will look just as good.
Yeah, have they anticipated that? I don't know. No, your point's well taken. I'm by the electric vehicles like I am by Bitcoin. I'm not buying into it. Nope.
Yeah, a silent dragway, imagine.
Yeah, really, a silent drag. That's right. I don't care how fast it is. I want to smell some race fuel and rubber.
Well, I guess the rubber would still be there.
Maybe, I don't know.
But there's definitely no, they'll have to fake the flames coming out of the back of the dragster. Because that's why, drag races are held at night. They're no fun in the daytime, but when you see your AAA fuel rod going down the quarter mile, you can't beat that. It looks like a rocket. And then, of course, you go for the crashes if you're a stock car fan. That would still happen with electric. Now, here's something that nobody's talking about with electric cars, and I know we have to go. But the new Tesla, there's something like 800 volts going through that car. So if you're in a car wreck, the firefighters have to find a way to ground that car before they can come in and rescue you. And they don't have the equipment to do that right now. You apply the jaws of life to 800 volts. Guess who needs some instant CPR?
Well, let me ask you another question, talking about the electric vehicles, and have they thought of that? Where does everybody think they're going to generate all this electricity to recharge all these electric vehicles from?
Yeah, and also they say, it means no more coal. No, these cars are going to have metal. To make steel, you need metallurgical coal, coking coal that has carbon. Without carbon, you can't strengthen iron to make steel. These things haven't been thought out. I saw a study that said the most electric cars will reduce the carbon footprint is at best 10%. And cars are getting more efficient every day. In the Alberta, Saskatchewan oil patches, they're capturing carbon. They're putting it underground, so they're not emitting like they claim they were. You can't use stats from a few years ago because the technology is improving drastically every day. So it's like the anti-fish farming people saying, well, we did a study 25 years ago. Well, the science is advanced. Things are, look at 25 years ago at computers and cell phones. What's cell phones?
Right.
And remember, in 1965, I think the head of IBM said, I can only see the need for 4 or 5 computers in the world. Things change, and they change very rapidly. Tim, always great chatting with you.
Thank you.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or anybody else on our show, you can send them to info@howstreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.